Hi, this is Zach here from Zach's Traders Cafe with a look at the major markets on Wednesday, the 4th of May. Starting off with the FTSE 100, and the weakness suggested yesterday with the RSI below 50 and a possible test of support towards the 200-day moving average panned out as expected. Close 61.85, that's roughly the area of the 200 and the 50-day moving averages. At this stage, only really back above the 20-day moving average at 62.79 would really change the prospect for this market. We'd want to see an end-of-day close above that before going long again. That's because we've got a possible rising wedge bearish formation here from the beginning of the year, and that could take the market back down towards, let's say, 60.30, 60.50 if it pans out as we expect, especially given this RSI break that we've seen. Onto the DAX, and similarly mixed picture in the sense that this market's trying to find support at the floor of a rising trend channel from the end of January. 50-day moving average 98.81, and we've tested that overnight. The positive, obviously, is the way that we had the gap through the gap higher through the 10 and 20-day moving averages last month. That would suggest we've either got support at 98.93, which was again, as I said, effectively tested overnight, or we might have to probe as low as 97.70 to fill that gap and then go higher. But a strange picture, a mixed picture, and therefore one that one would actually want to step aside from unless we saw at least an end-of-day close back above the 20-day average at that 10,067. Early aggressive traders really looking to buy that support line towards the 98.50, 98.80 area. Onto the US markets, and they reversed the rebound for the start of the week, but still put in a higher low. That low there for the Dow of 17,652, and yesterday 17,670. So it shows that this market's seen the support line from January. An end-of-day close probably back above the 20-day moving average. 17,862 is the buy trigger for those wanting to look for a target towards 18,500. But obviously you can see here that the RSI 49.73 just nudging below the neutral 50 level, and that kink to the downside also is a slightly negative, or a negative sign that we might have to wait a while for a fresh leg higher. Onto the S&P, also below RSI 50, 48.93, but it's seen this the floor of this rising trend channel from February around the 2040, 2050 area. Hopefully that will come into support. Obviously there is a probably likely need for a test down towards the 50-day moving average 2037, if only on an intraday basis. If you're cautious on this market, once again you'd be waiting for an end-of-day close back above the 20-day moving average. 2077 would do the trick there, and that might then get us 2100 and beyond. For the Nasdaq, obviously that's been the weak link as far as the US indices have been concerned. Here we've got more consolidation below the 50-day moving average of 4407, just below the 200-day line as well. So one would want to see a decent close back above that before thinking this is not a rising wedge breakdown as it appears to be. RSI at 37, which is in prime bear territory, be selling into strength normally, given that type of constructive situation. Onto the currencies, and here we have the cable just coming back there quite coming back there from below the 200-day moving average 148.67. So as far as we're concerned at the moment, at this stage only back above 146.68, the old February peak, would be a fresh signal to buy and to look for $1.50. Otherwise, support likely to come around current levels. That's a 10-day average 145.49. But we have the risk of a deeper dive towards 143.74, the 20-day moving average. The RSI still looking relatively healthy at 58 out of 100. Onto the euro, and here we've had also a reversal for this market, spiking quite probably higher than most expected towards the 116 level. But we're back within that rising trend channel, which has been drawn since November last year. 115 was the target we had on the basis of that. We obviously overshot the channel, as we did actually in February. Likely support now towards the initial April 114.64 level, and we've actually already had a low of the day towards that. So early and end of day close back below 114.64 would suggest that we're looking at a bull trap and a return back down towards the 112 zone for that market. On to dollar yen, and here I suppose this is the bigger story, or the big story, that the bounce at the floor of this falling trend channel from January, that took us down towards 105, 105.54. Still a bit early to sort of sing victory as far as the bulls are concerned. 107.63 probably has to be recovered on an end of day close basis. That was the old April floor for us to really suggest or consider that this market is back in business as a recovery situation. But we did have that bullish divergence point, which was identified yesterday, in fact, in the RSI window. So at least as far as the technicals are concerned, there is some backing for a recovery over and above the presence of the support line from January. Finishing off with gold, and gold bulls will be a bit disappointed that there was no further consolidation above $1,300. Instead, it's a bit of a bull trap situation. 1284, the old March high, and really we need to see an end of day close back above that before we can pencil in 1350 at the February resistance line projection once again. That's it from me. More updates at the same time tomorrow.